Hello to all traders and welcome back to another market engagement with the non-farm payrolls. Very excited to be here today. Lots to talk about, lots to get through. Just want to remind you that we do have the chat option open. If you have any questions directly as I go through the information from last time around, the data, predicted data from this time around, and also I'll be joined by my special guest Daniel in a few minutes just to go through any questions that you might have and any questions that I have for him actually. So it's been very interesting the last few trading sessions. We've had the first interest rate cut from the Bank of Canada, followed by the European Central Bank. And is the Fed going to follow? We'll have to wait and see. We'll check out all the markets as well. As I said, just thank you for joining me. Before we go into all the details, let's just go through a quick disclaimer just for security purposes to say that foreign exchange trading and investment in CFDs, in all CFDs actually, is highly speculative and may result in losses as well as profits. And trading in the foreign exchange and derivatives market is not suitable for everyone, and only risk capital should be applied. This webinar is provided for information purposes only, and no information contained here constitutes solicitation for the purpose of purchase of any sale or commodity, security or investment, nor should it serve as a basis for any investment decision. So Orbex Limited and myself does not guarantee the accuracy and completeness of any information on a supply. This is basically my analysis and what we're going to go through as well. So as I said, the chat box is open. So let's get straight into a few slides. As I said, as I usually say on every single NFP engagement, I don't want to bore you too much with the slides. Just want to get right into the market charts. But at the moment, we're just looking at just a 10,000 job number jump from last time around. You know, the previous readings for the NFP have been quite significant, almost, well, jumping over 300,000 finally. Before that, we had December, January, February, just kind of going into the 250,000 to 300,000 zone, but finally we got a jump above that. But if you see the last time around, 175,000 new jobs being added only. That's why we got a big miss on the dollars. That was quite significant there. And unemployment moved up to 3.9%, which was a bit worrying from 3.8. It's actually been creeping up higher and higher. We'll get into that a bit more with Daniel, but the last few sessions, it's been roughly hovering at 3.7%, but now it's jumped to 3.9%. So could that mean anything significant as well? We'll have to wait and see. And just have a quick look at the inflation and interest rates. So interest rates are still stagnant at 5.25 to 5.5% for the Fed. They're not giving any signals at the moment that they're going to start cutting rates even in their next meeting in a few weeks' time. Apparently, we heard in September they could do their first interest rate cut. But you know how the market's been, you know how it can be. So we'll see if that has any bearing on anything, especially in the markets as well. So hi everyone, I can see that you're viewing here. So welcome to the NFP. So feel free to ask any questions about any markets. And just having a look at annual inflation, it dropped to 3.4% from 3.5%, but it's still sticky, still remaining above 3%, quite a way, far way away from the 2% that the Fed has wanted it to be. So this is something that we're looking at as well, because if we do get this particular target reached, then we could be seeing quite a dramatic fall in a lot of the news readings as well. So at the moment, we've got just a host of the popular pairs from the market here. And I just want to start off actually with the we're going to start off with gold. Nikhil, welcome. Always looking on gold. Thank you very much for joining me. Cox, gold buy or sell. Let's take a look at gold right now. So for me, let's just put it on the daily chart first of all, because I've put in this 2300 area because I wanted to highlight this is the firm support that we're seeing for gold at the moment. If we do break 2300 and have a confirmation below it, then we can see a sell-off happening. At the moment, we saw a bit of a break here of a $5 to $10 move, but straight away, as you can see here, it broke, but then we saw a move back higher. And as I said, this is on the daily chart, just zoom it in a bit more. So we had a move higher, but since then it's been very choppy. Doji candlesticks, big wicks, big shadows to the downside before we had a move higher, as you can see here, to another record. And then we had fall downwards before we had this kind of consolidation zone at the moment. So 2300 is what we're looking at the moment, and it's pretty much showing at the moment that it is holding. So for me, if we're going to break 2300 and have a confirmation, then we could see the next movement to the downside, which could be towards past 2200 easily, and possibly towards the mid 2100 range. But we'll see what happens when the news is released, the NFP news that is. So we're just waiting to see as we get along on this movement, if we're going to see any big moves in the market. But if you look at gold itself, from its movements since we had this very big flourish on record high after record high, we're seeing now that there has been quite big sell-offs. Then it's very undecided, as you can see, very choppy nature in the market. We've had a move downwards, and then straight away another V-shaped recovery back to a record high. And then, as you can see here, we're just seeing now a bit of undecided movement on gold, because we've dropped roughly about $100, and we're just kind of consolidating roughly around this area here. If we forget the wicks here, the endings of the candlesticks, 23.25 roughly is the next support at the moment. So this is what we're looking at to be quite firm for gold. As I said, it is one of my favorite things to trade on, one of the most hot commodities for a lot of traders to have a look at. So we're just waiting to see now which direction it's going to go. I believe the Fed is going to give us that direction as well. So keep your questions coming. Gold looking for support at the moment. So thanks for your questions. Keep them coming. What's next? What's next in the market? We'll have to wait and see. But as you can see here, it's not looking too bad for gold if it can hold this particular target and start moving a bit higher. On the 1 hour chart, however, as you can see from today's trading, we have dropped roughly about $50 there. So it's quite a dramatic drop. Are we going to see any big movement, any more big movements actually coming into to play? It's, you know, we've got news from China, which has pretty much started dropping gold, and you know, China's central bank pauses gold purchases after buying it for the last 18 months. So we have had a bit of news already today for gold, and this is why we're seeing quite a bit of a dramatic drop. You know, $50 in just a few hours is quite extraordinary at the moment. But you know, if we do hang on to this 2300 handle, for me, 23.25. So we've got roughly another $12 to go. And then we'll be seeing if we can get this 2300 area moving as well. But let me know what you think. Is 2300 a firm support? Is the next move in the market going to be quite significant? And where are we going next, especially for the dollar? Well, let's get right on to the euro dollar, because on the daily chart, I just wanted to point out as well that we are still creeping up on the euro. You know, we hit the 109 handle when the ECB announcement was given. And now we're just seeing where to next, just trading just under 109 actually now. So are we hitting firm resistance under this psychological area? And are we going to go up for another 100 pips to the 110 area, which was pretty much close to the last swing high actually, since we saw this particular spike? But is it a false spike, or is it something to keep us interested in as well? 1 hour chart for euro dollar. As you can see, we're in pretty much a bit of a bullish channel at the moment. Just waiting to see if there's going to be any more further movement there. And, you know, when we do have channels, we just have to take a look at the tops and bottoms to see if we're going to have any significant breakouts or break lowers as well. So this is quite significant, but at the moment, very choppy. As you can see here, dropping not so long ago by 50 pips, and now we're just creeping a bit higher. So from that particular previous bottom, we are now trading just under 50 pips. So 50 pips swings in the market's not too uncommon at the moment. And also waiting to see if we're going to have any big meanings for this particular area as well, because that's going to be quite a big factor in doing so. So that's the euro dollar. As I said, any other markets you want me to look at, please let me know. Cable, on the other hand, is pretty much looking similar. It's got more of a bullish transition now, as you can see here. We are moving a bit higher. on this particular bullish channel, and we're just waiting to see now if that's going to have any big bearing on price action. So the Bank of England did say that it was going to start cutting interest rates as well as we go into the particular summer period. And they did say that they're going to have a bit more of a rundown as well. Thank you for your question, Gadgetarius. The DAX, please. Yes, certainly. Let's have a quick look on the DAX. And, you know, we have had quite a bit of a dramatic spin on the DAX. Let's go back on the daily chart, though, like we usually do. So we've had these fresh highs recently, but this dramatic sell-off has happened in the last, you could say. Is it something to be concerned about? Because we did have a dramatic sell-off when we had this fresh high not so long ago, before we had another push to record highs as well. As you can see on the weekly chart, very big momentum on the German DAX, and this is due to, you know, great earnings season for stocks in Europe, and the Eurozone, actually, Eurozone inflation coming down as well. Excuse me, which gives the indication that, well, the European Central Bank has taken action yesterday by cutting rates, so by 25 basis points, just to see what the mood is like. But since then, as you see, we've seen a bit of a dip on the DAX quite significantly. So let's go back to the daily chart. I just want to see on the hourly chart. The daily chart is just to see the overall picture, where we've come from. As you can see here, from October, rising by over 4,000 points, which is just phenomenal, really. So we haven't really seen quite a big move like that in a 6-month period for a long time. So it's something to keep an eye out for. You know, when we're looking at these big choppy downturns, it's not too much to be worried about. We just generally want to keep an eye out for support and resistance areas. So at the moment, you know, trading very high, going to above 18, over 18,500, but, you know, now we're dropping towards the lower end of 18,000, and we're just going to see if we have any firm support in that particular area. So naturally, you know, as the price action comes lower, we're just waiting at these particular bottoms. 18,385, 1890, possibly 18,400 would be quite a big psychological test for the DAX, and we'll see if that has anything to resemble as we get into not only what the ECB have done, but, as I said, what the Fed are doing as well. So, as I said, let's see where we go from there and where we're looking for particular indices as well. We're going to look at the NASDAQ as well shortly. Just want to go through the rest of the currencies. Dollar yen as well is something that's been concerning for the last few trading sessions, because since we had the Bank of Japan actually raising its interest rate from a negative at minus 0.1% going to 0.1%, that's been quite advantageous as well. Thank you. You're welcome. Keep your questions coming. Keep your questions coming. There is just over 15 minutes until the NFP is giving us possibly any shocks in the market, any shocks in data. Let's wait and see. Not too long to go now. But yeah, going back to the dollar yen, as you can see here, since the central bank has been fluctuating with interest rate hikes, we're seeing such big phenomenal jumps on this particular pair here. So if we just take things into account here on the daily chart, you know, in one particular day, you know, over 500 pips movement, and then since then it's 800 pips to the downside, and now we're just seeing more of this choppy action, 500 pips to the upside and another 300 pips down. So that's all in the space of a month as well. So quite phenomenal. That's from May, and May's data for Japan has been quite significant as well. So let's just get right into the hourly chart. Not too much to take into account on the hourly chart. We are in a bit of a bear market at the moment. If we just zoom out a little bit, you can see more of this transition. Even though we did get this V-shaped recovery recently, as you can see here, there was heavy resistance at this particular zone, pretty much making a triple top at the mid 156 area. Now just slight, you know, choppy action to the downside, and that's continued to keep on pushing as well, giving quite a lot of firmness and pressure. And now we're trading at the mid 155 area, which is, something not too much to worry about. As I say, if we bring it back on the daily chart, this significant push to the upside, we have had big swings in the market. This one here was a few hundred pips, and then we had another propelment to the upside here, and then down, up. So it's, very, very choppy, but in a very, very bullish manner on the daily chart. Intraday, hourly, as you can see here, really being pressured at the moment. So this is something that we are looking at and monitoring, because obviously we do have quite a lot of yen traders, not just dollar yen, but pound yen, Canadian yen, yen pairs across the board. So this is something we're going to keep an eye out for as well. Just having a quick look on the NASDAQ as well. And as you can see here, we're seeing now that price action is firmly to the upside. It's the same with the S&P. The Dow is a little bit subdued, but if we take a look at the NASDAQ, I mean, another record high a couple of days ago, and now actually we're closing at another record high. So with everything in mind, that the Fed, inflation, stocks, AI, artificial intelligence stocks, Nvidia really pushing stocks as indices as well. It's something to really, really start paying attention to, because prices can keep on pushing that bit higher as well. As you can see, not too much we can talk about with the NASDAQ. We've hit another record high. Naturally, we're going to have a bit of consolidation like we have been doing recently, but it's not really a surprise that we are seeing another push to the upside, especially on the NASDAQ and the S&P as well, because we are seeing such a phenomenal movement in the market. I can see that Daniel is just joining me now, so it's time for me to put my headphones on and let him into the studio. Hi, Daniel, can you hear me?
Hey, yeah, seems to be working.
Yes, everything's working so far anyway. We never know.
Yeah, that's the worry thing. Everything works at the beginning, then you don't know when the tech glitch is going to come along.
Exactly. So thank you for joining me once again, Daniel. Just been talking to our viewers, just running through the markets at the moment, and just wanted to pick your brains once again, because we've had the Bank of Canada being the first G7 central bank cutting rates. The ECB followed pretty quickly after that as well. So
Yeah, just a couple days. Yeah.
Would you say this is going to be a bit of a domino effect, or will some central banks like the Fed wait until possibly September or next year? Are they going to assess the market mood before they make any decisions?
Well, yeah, there seems to be the thing that everyone was kind of hoping for, because you get the first ones going, and then you would then get a rush going on. But it
Exactly.
seems like the Fed is kind of like the more stubborn of them. But also, you have a thing that, where if a bigger one like the ECB is going to cut rates, then others sort of have to do it to keep up, because you get the difference in interest rates. And so it would be like smaller ones like the Riksbank and well, actually I think the Riksbank did it in anticipation, because they already expected the ECB to cut rates, so they had their meeting a little bit earlier. So like a couple of smaller ones around Europe, the Central Bank of Poland would actually be forced to lower rates. But like the Fed is also kind of well, I guess in terms of the size of the economy, they're the second biggest. So they can sort of just do their own thing, and they don't have to wait. And it seems like the Fed is more interested in waiting. Of course, the question is, what's the BOE going to do? Because they're can be separate. They have a little bit different. The UK is a little bit different conditions in Europe, but also they're going to feel the effect from the ECB, so they might help them push them over the edge.
Yeah, I mean, we already heard from the Bank of England governor, I think last month, to say that summertime they are looking to start cutting rates as well. So it won't be a surprise if they follow suit, and we see the Fed hanging on.
That's right. He's been particularly kind of, well, most central banks are kind of like usually like to push back a little bit against the market, because the market usually is more dovish than the central bank is, and the central bank is usually trying to tell the market, hey, we're not going to cut as fast as you think it is. But Bailey's been really like, yeah, no, the market's spot on, and it's just a little bit unusual for a central banker. But so maybe they'll cut sooner than expected, actually.
Well, yeah, this is the thing. I mean, if you think about where we have been, record, or not record highs, but 40-year highs on rates in hikes, and now we're kind of waiting just for that one bank, which was the Bank of Canada, to start off
Yeah,
the domino effect. And markets didn't react too much. I think like the Canadian pairs and the Euro pairs only fluctuated like 40-50 pips, so it wasn't like a significant crash in the market and like, oh my god,
yeah.
run for the hills. They started cutting rates. So I believe if the Fed does, okay, the Fed is probably one of the biggest movers in the market at the moment, so they're
Yeah.
probably treading carefully. But if they do cut rates in the next few months, can you see a catastrophic move in the market, or would it remain steady?
Well, most likely not, because everyone is kind of really already expecting it. We know the
Exactly.
Fed's going
Yeah.
to cut, but we don't. We just
Mm,
is it going to be September? Is it going to be in
mm,
November? We don't know exactly what time it is. But same thing with ECB. There was like a little bit of doubt that it was going to be either now or it'd be the next meeting. So it's sort of like it's not a terrible shock. What the market really doesn't like is shocks. So
exactly.
if one of the central bank, well, the BOJ is the one that likes doing the shocking things where they just come in and just go and do something without any kind of preparation for it.
Yeah.
So that would probably be where you might expect more fireworks. But the rest of the central banks are always trying to anticipate what they're going to do, and most likely the Fed is going to anticipate. Like they have a habit of one meeting, though the next
Hmm.
little thing a bit coming up is a little bit different. Well, the meeting before they say something that is pretty much telling the market, hey, we're going to cut rates at the next meeting.
Yeah.
But of course, this time they don't have the next meeting would normally be August, but they kind of go on a break, and so
Mm,
then the next meeting is actually going to be September. So you have this pretty big gap.
mm,
But in August you have the Jackson Hole Symposium, and it's kind
mm,
of significant because usually at Jackson Hole is when they go and announce like a big change in policy. Like when they started hiking, they started doing it
hmm.
after Jackson Hole, and so
Yeah.
if they're going to turn around and they're going to start cutting, there might be well they're going to make that known at the Jackson Hole Symposium. So it might be next week's Fed meeting might actually not really do all that much, and
Mm.
everyone's just going to wait till August.
Well, yeah, and why not go on a
If
summer
that makes
break when
sense.
the economy is? Yeah, I was going to say, why not go on a summer break when the economy is kind of waiting for you to make your next move? Best time to do
Yeah,
it,
I mean,
probably.
yeah,
So
exactly.
exactly. So aside from that, with inflation still remaining a bit sticky in America, year on year, just at 3.4%, it is still quite a way off the Fed's target of 2%. So would you say this is another reason the Fed is taking into account that, let's wait a little bit longer, let's keep it going. The economy is still stable. There's no signs of a recession at the moment. They can afford to possibly keep going to the end of the year, perhaps.
Yeah. Yeah, that's one of the Fed has a distinct advantage over the other central banks. Even the Bank of Canada has, because the Canada and the United States are so interconnected. There's a lot of similarity between them, but the economy in the United States is growing relatively fast, whereas
Mm,
in Canada it was slowing down. In Europe, it's hardly growing at all. And
yeah.
also in the United Kingdom, well, it's starting to rebound, but they had a recession technically
Mhm,
last year. So for the Fed, I mean, these other central banks, they're really under pressure to lower rates to get the economy going, whereas the Fed, they kind of have the opposite problem. The current
mhm,
estimate for the growth in the second quarter, I think, is like 3.2% annual, which isn't too much, but it's like
mhm,
it's pretty decent. So like for them, there's relatively no pressure for them to cut rates in order to boost the economy.
mhm.
So but it could also partly be the effect of it's an election year, and so the government is out spending as much money as they can on different projects that would get the voters happy and make sure that they go and vote and such. So
Yeah. Well, I was going to also say that I think we touched on this the last NFP. The unemployment rate is creeping up to, it's at
yeah,
3.9% at the moment, just creeping up to an uncomfortable 4%.
yeah,
Um,
somewhere around 4% is where the rate is. I mean the
yeah.
structural level is, yeah.
Is that something to concern the economy, or is it just a case of, we see 3.9%, then this month we might see 3.7%, and, it is fluctuating around that particular area. Is it something to be concerned about?
Oh, well, the thing I mean, it could be, but the thing about unemployment numbers are they're kind of lagging indicators. So usually, if there's something, they might move around a little bit for like things that have already happened, maybe 2 or 3
Yeah.
months ago. So like
Yeah.
when you had the last big recession, the unemployment rate didn't start ticking up until the market crash had already happened. So
Right.
if you're like looking at I mean, the unemployment figures are important sort of to anticipate what the Fed might do, because now they're really looking at how the pressure of wages is going to push on inflation. But in terms of like economic performance, it would be something more of a lagging indicator. So
Yeah, it's not something to concern the economy about. I mean, the Fed isn't
yeah,
really going to worry if it goes over 4%, let's say.
yeah, it's kind of, since it's right at, well, it's right, well, we don't know exactly where structural unemployment is. I kind of
Mm,
doubt that even the Fed knows, but they kind of
that's true.
guess around where it is. So,
Yeah.
but if it were to go up to like 5 or 6%, there's like a pretty big, margin there that they would start before they start getting worried. And
Mm,
since for the last, what's it, 2 years, almost 2 years now, they've been really worried about it being too low.
mhm.
The switch would probably take a little bit while till they change their mind to be start worrying about it being too high.
Right. Okay. And just under 4 minutes to go before the NFP announcement, I just want to pick your brains on, because we're getting closer to the to November, which is going to be the election
The
period,
big fireworks, yeah.
the big fireworks. Yeah. Because of the news that's happened with Donald Trump, and now he's more of a favorite to be
Let's,
the next president.
yeah,
Um,
that's how politics is unusual, unexpected.
Exactly. Yes. Of course. Go to jail, come out, be president. You know, this is.
Yeah.
I think it's the new trend. Would you say this is going to be a big market mover if there is a new president in November, or is it just more of the same thing because we know what to expect from Donald Trump because he's already been president? It's not as if it's a new person coming into to the White House.
Yeah, exactly. That was sort of the thing that happened like last time when he was elected.
Mm,
There were a whole bunch of people that bet on it not on the market not going up, and then when
yeah.
like the night of the election, he went and gave this speech in which he said he was going to do this $1 trillion infrastructure program thing, and
Yeah.
that pushed the markets in the opposite direction. There was sort of like a really strong inflection point there when he was elected versus prior. But now everyone, as you mentioned, they already know what it was like 4 years ago. Well,
Exactly.
no, 8 to 4 years ago, that period of time, almost.
Yes.
So
Yes.
they're like, well, we already know what's going to happen. So it depends on, I guess, on the polls, how people are. If there's a definitive trend, say in September, October, then the
Mhm.
market's most likely going to start getting in position for that result, and then the reaction will be less of a thing. But if the polls are really narrow and there's a lot of uncertainty, then you
Mhm.
could get a stronger market reaction because one thing is people just don't know which one it is, so they
Yeah.
might just keep all their money out of it, and so you can see a bump up no matter who wins, essentially.
Well, yeah, that's it. I mean, it's so unpredictable because if we cast our minds back to, when Al Gore won the popular vote and Hillary Clinton won the popular vote in 2016, Al Gore, I believe, in 2000, and they both lost out because, there was such a seismic shift on voting day. You
Yeah,
just never know which way it's going to go. But at the same time, the markets weren't really moving so crazy because of
yeah.
the results. So, if we do have President Trump coming back in for another 4 years, you're right. We probably won't see a massive shift in stocks, shares, indices, etc.
Yeah, mostly as a result of everyone already kind of, well, everyone knows what it's going to be like if Biden's reelected, and everyone kind of knows what it's
Yeah,
going to be like if Trump gets reelected also. So it's
yeah.
like,
I was going to say
eh,
it's an interesting one because we haven't seen for many years that an ex-president could be re-elected. So we know what
yeah,
to expect from the current regime, and we know what to expect from the regime, well, 4 to 8 years ago. So it's quite an interesting uh, take on the next presidential election, isn't it? Because every year we get a new president or re-elected one, but never
yeah.
someone that's been out of office and then comes back in. So yeah, it'll be
Yeah, I
quite.
think the last time that happened was like in the 19th century, so before even the Fed existed,
Yeah,
before the Nasdaq was a thing. So it's
yeah.
kind of like hard to use it as a comparable to what might be happening now.
Well, at least we'll get our first glimpse of it in our lifetime. So that'll be
True.
something to look forward to.
Hey, you've got some history going on there. Yeah.
Exactly. So just under 20 seconds to go. And
Ooh.
we're not really looking for a big NFP, apparently. It was 175,000 last time around, predicted to be 185,000. Obviously, that could change and we could have, 500,000 jobs coming in. But
Yeah.
we'll just wait and see. And obviously, we've got the unemployment rate from Canada coming in at the same time, so we could see some big moves on the loonie or the dollar CAD. And we're seeing some big moves at the moment because the NFP numbers are just coming in now. Wow, the euro dollar is dropping 272,000.
Oh yeah.
So just over 100,000 more jobs than last time around. Well, no, just under, sorry. But quite a decent job number. Okay, unemployment rates finally jumped to 4%.
Yes, the highest since was the beginning of 2022 or something like that.
Yeah, it's very, very interesting. So we're
Yeah.
just seeing some big moves in the market in favor of the dollar naturally, because we're seeing quite a big move. Okay, 50 pips across the board. The Nasdaq's dropping quite significantly as well.
Oh right, yeah.
That might mean the Fed might start cutting rates a bit sooner than what they thought. So indices are dropping. Gold's just dropping. Actually, gold's dropped already $50 today. So now it's dropped another few dollars as well. So quite a good NFP for the dollar, would you say, Dan?
Yeah, you had a little bit unusual thing where you have a high one number is one direction and the other number is in a different direction.
Yeah.
Again, where you have the unemployment rate is sort of signaling, hey, the unemployment the labor market's getting a little bit more loose, but then you have a large number of jobs created. So now it's going to be which one is more important, particularly as far as the Fed is concerned. I wonder
Yeah.
what average wages are like.
Yeah, let's take a quick look at that.
Yeah.
Average hourly earnings. So earnings
Oh,
month
they're
on
higher.
month. Yeah, they've jumped up a bit. Yeah.
Yeah,
So
that's probably the big thing because that means there's more pressure on the Fed to keep rates higher because because if you have higher wages, people have more money to spend, which means they're more willing to pay for higher prices, which means you can have higher inflation. So the higher you get with wages, then the more likely the Fed is going to keep rates higher. So that would probably really hurt the Nasdaq, especially
yes,
as you mentioned.
it
Yeah.
looks like it is doing at the moment. So if you go out for a pizza and it's an extra $5, you're not really going to worry too
Yeah.
much about paying it if you're getting a little bit more salary in your paycheck.
Yeah, exactly. But
Exactly.
that's the theory, at least. I
That's
mean,
the
personally,
theory.
if I got a increase in my salary, I'm still not going to be spending a whole bunch of extra money.
Yeah, exactly. You'll shop around for a pizza to see the best bargain at least.
Yeah. But then I'm probably unique, as a financial analyst, you're always penny pinching. So
That's true,
I,
actually. Yeah,
I'm
yeah.
not a good measure of the average consumer.
You're not doing good for the economy, Daniel. That's for sure.
True. Yeah. But maybe the Fed would like me because
Yeah,
I'm not
true.
pushing inflation.
They'll get you on their panel pretty quickly for any questions.
Yeah.
So the dollar still progressively moving. I mean, euro dollar up to 60 pips now against the dollar against the euro, sorry, and moving across the board actually for the dollar yen jumping higher as well. So I think this is probably the theme for the next few hours at least. We've got also ECB President Lagarde speaking a bit later on in the afternoon, probably just to give us
Right.
a bit of an update for where the ECB are going next time around. But would you say now that now that the central banks that have cut, ECB and Bank of Canada, but the Bank of Canada president did say that this is a sign of things to come. They probably won't keep holding. They'll probably keep on cutting 25 basis points at a time now to try and get these pre-COVID levels of interest rate back to normal. So is it going to be much the same now, do you think, as we go into the rest of the year at least?
Yeah, probably for the Bank of Canada, because of their economy slowing down, for them it's going to be more cutting, but they have a bit of a floor now with the Fed, because if they cut too much, then they're gonna the difference, the interest rate difference might end up weakening the Canadian dollar too much, and that won't be all that. But I mean, that wouldn't be good for the exchange rate, but on the other hand, that would help push the economy because then Canadian products are cheaper to sell in the United States. So it depends on, I guess, whether the economy sort of balances out. But the problem with the Canadian economy is that it's more of a regulatory issue than it is like a monetary policy issue. So Canada has a similar problem that Europe does, in that sense that the central bank can really move the interest rates around a bit, and it really isn't going to have all that much effect in the economy because it isn't because of the cost of borrowing, and that Canada has that problem. So I the I guess Maxim is going to try. It is the same thing as the ECB was trying to push up inflation before, trying to get the economy going. But if it's a really uphill battle, so maybe they will cut more than what you might expect based on the interest
Yeah.
rates.
Yeah, that's true. Yeah. I mean, for every economy that we've looked at over the last 3 or 4 years, especially when COVID started, the pandemic started, we've seen, big swings in the market, especially on indices, especially on currencies.
Yeah.
Is it a case of everything getting back on its feet now? I mean, we're out of lockdown. It seems COVID is a thing of the past. Recessions and soft landings. Recessions have been avoided. Apparently, soft
Yeah.
landings are happening. So, is it a case of just now focusing on inflation targets, interest rate cuts, and just basically getting on with, economies just trying to rebuild and get on with things?
Seems to be pretty much. I mean,
Yeah,
everyone really wants to forget about COVID at this
yeah,
point.
pretty much. Yeah.
Uh, though, of course, you had that N5, no, H5N5
Hmm.
variant of the flu that was recently passed on to humans. I think it was in Mexico, a couple of cases of that. So we
Yeah.
might have another pandemic floating around as usual, uh,
Yes,
just in time for the election, of course.
of course.
But probably not particularly likely. You have bird flu popping up almost every year. There's a little bit of cases, and it
Mm.
doesn't really go anywhere. But for now, this I think last year was the first full year when there wasn't any lockdowns, or at the very beginning there was a little bit of lockdowns.
True.
Uh,
Yeah, I
yeah,
think
so
China was still trying to impose something,
yeah,
but they had to give in eventually.
yeah. So 2024 it would be a full year when no country anywhere has any kind of COVID restrictions affecting it,
Mm.
and so that would be sort of like this is the year then new baseline, and then from there you can start comparing probably going forward. So definitely by the end of the year, you could say from a, I guess, numbers comparative numbers perspective, we can say finally not have to talk about COVID anymore.
Yes,
Uh,
definitely.
but then of course we could always end up with a bit of a recession at the end of the year, which
Hmm.
because one of the problems that COVID had is that everything was set up for there to be a recession just before COVID, and then you had they had this massive amount of money getting pumped into the economy, and that
Mm.
sort of covered up a lot of the holes that the economy has, and so there wasn't a proper recession. So a
Yeah.
lot of those, so the next recession would probably be a lot faster because normally you get a recession between every 7 to 8 years. Before
Hmm.
that, there was like it was 10 years, not 10 years. No, it was more than 10 years that you didn't have a recession.
Mm.
Yeah, it was coming up to 11 years since the last recession. That's one of the longest periods of non-recessionary growth that you've had for decades. So recessions happen. It's not something you can't kick
It
the
just
can down
depends
the road
on if
forever.
it's yeah, it just depends on if it's a market crash or if it's just like a
Yeah,
technical recession where we can just bounce back out of.
yeah. And so the thing is, we didn't. I mean, Britain's had their technical recession, so maybe they might be able to deal with it, but the United States didn't. The
Yeah.
European Union sort of had this. Well, they went down to the same level of growth that they had pre-pandemic, and so
Mm.
it's kind of there really has. I mean, it's possible. I can't say that I know the future for sure, but it just sort of seems like you didn't have the cleaning out of the zombie companies and everything that you would expect to have during a
Sure.
recession, because there's a lot of companies that have high levels of debt, and then they end up those are the one or they have high levels of inventory. There's a lot of companies that still have high levels of inventory that they haven't really been able to process through, and so it's kind of necessary to have a recession to sort of clean things out of the economy, and that
Mm.
seems it hasn't happened yet. So it's why until that happens, then we can be still worried about a recession popping up.
Exactly. But like you said, a recession sometimes can, kickstart something. It can
Mm,
reset and then see where the economy is going wrong. And as we just said, if it's not a market crash like in 2008, if it's just a technical recession, it can, economies can get back on their feet and just have quarter after quarter of progression.
yeah,
So,
like 2020, no, is it 2001? You had a sort of like a soft recession, like
mhm.
which is a dot-com bust. So maybe it's going to have a little bit of an AI bust, and then
Yeah,
we'll get back to normal.
exactly. Yes. Stop the robots from taking over and then we'll
Yeah.
get back on our feet. Okay, Daniel. Well, that's great. Well, thank you very much for joining me once again on the NFP journey. And
thanks for the info.
No problem. And yeah, as we come to the summer season, I guess we'll have a bit of a slowdown, perhaps on some currencies or indices, maybe, as a lot of people take breaks, especially traders as well. But then we'll get straight back on it with the presidential election race, which should be heating up soon. Actually, I mean, it's only a few months away. So
yeah, for voting actually starts in late September, for like early voting. So
yeah,
you have the infamous debates are probably going to be coming up. I think that's the end of this month, which is unusually early. There'll be a bit of drama, and then we have July and August, which are kind of a little bit calmer, and then we come back to September to see what happens. September is usually the big month when things happen.
Yeah, exactly. So looking forward to that for sure. We'll definitely invite you for that NFP for sure.
That'd be awesome.
Okay, Daniel, thanks again for joining me, and we'll speak again next time around.
Yeah, take care.
Okay, thank you. Take care. All the best.
Bye.
Bye for now. Bye. So that was Daniel, and great to have his insight. And as I say, keep your questions coming if you have any. And we'll just take a quick look on the charts one more time before we end the presentation. So let's just take a quick recap. So we had some questions on the DAX. That moved a little bit, but not too much of a fluctuation. Obviously, the NFP not really affecting European stocks too much, especially the DAX. But the big mover in the market, you could say, is the euro dollar. I mean, it's been quite phenomenal. If we go onto the 4-hour chart, what a correction that is at the moment. And we did say that the euro dollar could have a collapse. And if we take a look on today's trading, 70 pips in just a single NFP reading is quite a big move in the market. So a lot of traders either making some money or losing some money, depending if they got their pending orders in. Always make sure you have your pending orders in. Just a little bit of a friendly warning there. Gold, before the NFP began, we did, as I said, drop $50, and now we've dropped another $20. So we've broken through pretty much the previous support that we labeled earlier. Well, we're kind of on the borderline, actually, 23.14, 23.15, but 2300 is the main support here. I know, Nikhil, if you're still with me, you're very much a gold trader, and we're just waiting now. If we do see a break, the next support for bulls is at 2300, so that will be interesting as well. And just let's take a quick look at the NASDAQ, because with indices we could see quite a big sell-off, and this is because the Fed could actually start making moves a bit earlier. Just take my headset off because I don't need it anymore. The Fed could actually start making moves a bit earlier now that they've seen progressive job growth. So this is why the NASDAQ has collapsed a bit, because there won't be as much funding from the government as there was before. But this could bounce back quite significantly, just piercing now 19,000, dropping to 18,925 at the moment. So this is quite significant as well. But I'll keep the chat box open for a bit longer. If you have any questions, concerns, please let me know, and we'll be able to answer any questions going forward. So have a great trading day ahead. If you are trading into the weekend, have a great weekend ahead, and we'll speak again next time around on the NFP. Thank you very much, and bye for now.